Hey everybody, I'm Jay Tipton from Gordian Strategies, and you're listening to Untangling Climate Finance. In this episode, I'm joined by Maria Filmanovic, co-founder and director of Abatable, a company working at the intersection of climate data, investment strategy, and the evolving voluntary carbon market. Maria's background spans traditional finance, impact investing, and carbon, including time at Goldman Sachs. Today, she leads Abatable's work on due diligence, policy research, and a suite of tools helping corporates and investors navigate carbon markets with greater confidence. If you've followed the headlines over the last year, you know that trust in carbon markets has taken a hit. From questions about project integrity to growing uncertainty in policy and compliance, it's clear that good intentions aren't enough. We need better information, better safeguards, and a smarter approach to risk. And that's exactly where Maria and Abatable come in. In our conversation, we dig into the three key risk categories every investor and buyer should understand: operational, political, and methodological, and how they shape the viability and credibility of carbon projects. We also unpack Abatable's VCM Investment Attractiveness Index, a tool that ranks countries by their readiness to host and scale carbon market investments. Maria shares how Abatable is helping clients move beyond carbon credit quality to a fuller picture of project risk, and why the future of climate finance depends on transparency, not just trust. This is a wide-ranging and insightful look at where the carbon market is headed and how the right tools can help us get there. All right, time for Maria Filmanovic. Let's go. Maria, welcome to Untangling Climate Finance. How are you and where are you calling in from?
Hey, Jay. Thank you so much for having me. Excited to be here and discuss some of the most urgent and innovative developments in climate finance. I'm calling from London. We just had London Climate Action Week this past week, and this is where Abatable is currently based.
Cool. And you also had a heat wave, if I'm not mistaken.
Indeed. I think it's really highlighting the importance of some of the work in some of this talk as well.
Yeah. Without a doubt. Europe's getting rocked currently. I am in Madrid and it's normally hot this time of year, but it is exceedingly hot. So we're feeling it everywhere. All right. So to kick us off, I know that you started your career in traditional finance. Now you're working in climate finance, but you began, and correct me if I'm wrong, at Goldman Sachs. And then eventually you co-founded Abatable, which is where you're at and what we're going to discuss today. I am curious what motivated your shift into the world of climate finance and climate change and carbon markets.
Yeah, great question. And you're right in pointing out I started in traditional finance even before climate finance was really a thing, to be honest. I started in finance just because I was really fascinated by this idea of potentially having people with money backing innovative ideas that could really change the world and have an impact. And when I did start it, I never kind of applied the lens of climate finance to it. But when suddenly impact investing became a big thing, social responsible investing was a key theme as well across some of the clients that we had at Goldman, I certainly realized that's exactly what I wanted to do. And a turn of events kind of started by me looking at the impact space, joined this very small team at Goldman that kind of looked at elements of renewable energy, environmental finance, fintech, financial inclusion as a key topic. And then from there, started to really be fascinated into the carbon markets. And what I loved about carbon markets was the idea that you had a key metric already quantified, right? Carbon, to the extent that people think it's quite simplistic and think about carbon as a standalone and not looking at beyond carbon. But there's certainly an element of there's a key incentive for people to start investing into something that sequesters and avoids CO2. So that's kind of how I got into the world of carbon markets and climate finance as well.
Okay, very good. When you were at Goldman and you said you started working on this team in particular, was that something that was like assigned to you, or were you interested in this space and kind of were like, hey, I want to go this direction?
To be honest, a bit of both. There was something that I was interested in. I kind of started to already look at elements of impact investing into elements of the work that I was doing that was in private equity at Goldman. And then fortuitous turn of events, at the same time, Goldman had acquired a boutique advisory business called Imprint Capital based out of San Francisco. And they had a job opening and I kind of raised my hand and in a matter of 6 months since the acquisition was announced, I moved to San Francisco and joined this team. And that's really where most of the work happened around climate finance and carbon markets within Goldman.
Right on. Yeah, the Bay Area is a very good place to be if that's what you're interested in, because there's just so much happening there in tech general, but of course, climate related, climate tech, VC, all of it. So I'm sure that, that was a incredible experience for you to be there in the middle of that energy.
Totally. Yeah, I think, to be honest, through that experience, I've definitely come across very highly impact motivated individuals with very large pool of capital. And I think, to your point, the Bay Area was a unique ecosystem at the time that was really leading on some of these topics, more so than the ecosystem of New York and London. So for sure.
Yeah. Great. Well, let's change directions to Abatable, which you co-founded. And I would love to hear the core mission. I know that you operate at the intersection of finance, tech, and sustainability. So why don't you describe the main objectives of Abatable?
Yeah, so what we do at Abatable is predominantly working with very large organizations that have increasing needs to meet their net zero in the carbonization journey. As you know, it's a very ambitious journey, and it doesn't happen without some element of carbon financing. So really what we're trying to build at Abatable is an opportunity for corporates to work with a trusted party like us in codifying what they want to buy in terms of carbon credits and how that fits into the strategy, and then access the market. So one of the things we've built, it's in a relatively simplistic way. The way I would describe Abatable is predominantly an RFP automation platform. So we work with corporates, issue these requests for proposals, go to the market. We connect corporates to a network of roughly 4,000 carbon project developers that are developing projects around the world with different project types, different criteria and impact metrics attached to that. And then we also help them confidently due diligence those projects, build a portfolio, and then contract and monitor from there. Ultimately, the objective and the main kind of vision and goal that we're trying to do at Abatable is really empowering every single organization to really build a thriving future for people, climate, and nature. And that's simply because we realize that the carbon program for these corporates is just one of the many tools that they have to also generate the sort of beyond carbon metrics that might be attached to their sustainability goals. So a lot of what we do is not just talk about carbon, it's typically also looking at carbon and social impacts, or carbon and ecosystem services impacts, and how that links to other frameworks that corporates need to report on beyond their net zero and decarbonization journey.
Right. And that's kind of where the sustainability element of that comes in, right? Because of course, it's not just all about carbon. There are many other facets of business, depending on the sector that they operate in, that have an impact on this in one way or another. So beyond carbon, of course, is important, but there's other bottom lines that are valuable for them.
Yeah, absolutely. And what we're trying to do is really helping the corporates understand this whole ecosystem. Often, you know this quite well, Jay, and I'm sure you've tackled this as part of some of the previous episodes. There's an element of mistrust often that comes with people looking at carbon markets. And really our role, the way we see it, is beyond the kind of sole element of going to the market, procuring, getting quotes and prices back for people to sort from, is also understanding what are the history behind these projects and what are the impacts that rely beyond just purely looking at the carbon metrics. So that's certainly something we want to do, and we want to bring transparency, data, and our service offerings around due diligence, geospatial capabilities into the picture as well.
Yeah, you're so right about that. That's definitely, the trust building is a huge part of the challenge, but it's also so core to moving everything forward. So undoubtedly a major consideration. Let's talk carbon markets. You just said this, one of the elements of your work at Abatable is due diligence. And of course, with that comes research. And so with that in mind, what would you say are the key risks or red flags that investors or corporations should be aware of when evaluating projects? And part two is, how does your work specifically help to address that?
Mm-hmm. Yeah, great question. I think, to be honest, I love this because I don't think the market really talks about so much around risk. There's been quite a lot of focus on high integrity for sure, in terms of debate when looking at carbon credits, and a lot of initiatives try to really hold the torch and push the high integrity agenda. But when it comes to high integrity, the way we look at it, there's two elements, right? One is risk, to your point. I'll tackle in a second how we look at risk. And the other component to high integrity, I think beyond the risk, is quality. So what are the characteristics of that relative to the impact goals that a project is set to achieve, carbon being one, of course. When I look at risk specifically, so we look at risk as any investor would look at risk, right? And often there's elements of operational feasibility of a project. Is the project something that is able to sustain themselves? Does the project developer or operator on the ground have a track record of developing project in the same project types and region? Do they have key stakeholders acceptance in that? So there's an element of operational feasibility of a project and track record of the operator. That's something that we are absolutely key in assessing and spend quite a lot of time in developing those relationships with the implementators to a point where we have a sense of what their experience is beyond what we can read in forums and public domain. That's one. The other thing that we spend quite a lot of time and research efforts on at Abatable is assessing also the political context of that project. And what I mean by that is specifically, what is the jurisdiction the project is developed on? What are the land titles? How is the carbon title, like the ability to use that carbon claim, interpreted within the law? And so we look at carbon-related risk alongside the traditional political risk of corruption, risk of high element of social disputes and things like that. So that's the second component. That's around political landscape. And then the third one is something along the lines of methodology used and how risky or underdeveloped that methodology is. There's quite a lot of developments that have happened recently, specifically as standards that have updated their carbon standards methodologies and how they quantify carbon. And with that, they've introduced a level of conservatism. So we kind of look at elements of projects using more recent methodologies at lower risk relative to projects that have been using very old methodologies at higher risk.
Yeah, that's a work in progress, as you know, right? Methodology updates, but of course it is becoming, as you said, more conservative, and then also oftentimes with higher levels of tech that have introduced more reliable inputs. But yeah, that's an ongoing one. Okay, great. So the three that you just pointed out, I assume are built into the next thing I want to talk about, which is your VCM Investment Attractiveness Index. And I, in particular, find this to be incredibly interesting because we have clients, either investors or developers, kind of all over the world. And we have these kind of same conversations that you just pointed out, which is some of the risks that you need to take into consideration is what's happening politically. What are the regulations like coming from the top down? What does a new administration look like for a potential project? And so I understand that these types of things are built into your VCM Investment Attractiveness Index. So I love that because for me, it's like all in one kind of idea. But why don't you walk me through the index and how it works? And then for the listeners, I would highly encourage you all to go to Abatable's website, see the visuals. What they will see is that there are some countries that are ranked higher than others, and I'm sure you'll walk through this. So part two of that would be explain why these countries such as Colombia, Kenya, or Cambodia are ranked highly for last year in 2024.
Absolutely. So maybe just talking about the VCM index specifically, this is work that we had started to think about really in the context of risk. And as I explained, policy risk for us is a key emerging risk in this market. For people that are closer in monitoring some of the developments, there's some countries that are developing favorable regulation and legislation to be an active participant into this emerging market, that is carbon market, as a way to attract climate finance. And there's some countries instead that are lagging behind. And simply by providing this sort of research and work, what we're trying to highlight on a yearly basis is some of the countries that are making strides in creating the favorable landscape, whether it's from a regulatory perspective, in terms of engaging in bilateral agreements between different countries as a way to accept climate finance, but also just in general, like, do they have the political environment that's favorable for any sort of investments to be coming into the space? And then lastly, the third pillar we're looking at is what is the carbon and impact opportunity set that they offer to investors looking at this space. So by looking at the three pillars, and the ones that I've mentioned are what we call the initial one, global carbon market readiness. That's political lens, investment landscape, and then climate, nature, and people opportunity. We're able to then create a weighted average score between those elements and then get to an overall score, changes every year. And you pointed out Colombia, Kenya, and Cambodia. Those are countries that have either had a fast developing market or countries that had quite a large ecosystem of supply, carbon project developers developing project there, but also supply potential that's been developing over the years in quite a large ecosystem. And those are the ones that ultimately are reasons why these are countries that score quite highly in our ranking. At the same time, they have been engaging quite a lot in bilateral agreements or developing legislation over the last year or so that provides clarity for some of this bilateral agreements to come. And then thirdly, to the last point that I mentioned, these are countries where there's a huge amount of impact. Colombia having been one of the first countries that's developed not just a carbon market domestically, but also increasingly looking at biodiversity potential. And then Kenya equally, where we think the opportunity from a clean cooking perspective, but also renewable energy penetration is really increasing.
And so are you all, one, planning on adding additional countries? And then two, is the index something that you're going to update annually or biannually, or what's your game plan for that?
Yep. So it's work that we are updating on an annual basis. We're looking at potentially updating it on a more regular basis. We as Abatable have done quite a large investment in building a team of policy analysts that are monitoring these developments that could feed into the score. We're also relying, of course, on some other public data from the World Bank that are not as frequently updated as one may wish to see it.
Definitely.
We're working with our constraints at the moment, but certainly on an annual basis, this is work that we started with risk insurance company that kind of initially worked with us in developing the methodology. And it's now a project that we're continuously thinking about when it comes to different applicability. But, you know, the frequency will be annual and then potentially on a semi-annual one.
Awesome. That's great. Yeah. I mean, of course, as you know, like certain countries such as Kenya, for example, do move quickly. And so they are releasing updates pretty regularly, right? So it's good, I think, that you guys have the capability to track these changes because, of course, that can impact potential for finance that flows into there, whereas it can go the other direction as well, right? Like in a negative sense. So these types of things, I mean, obviously, there's so much happening all the time that monitoring in real time is very complicated, as I'm sure you know, but it's still, I guess, to the best of your ability, very valuable for potential investors.
Yeah. Absolutely. And I think to your point, right, there's so much thing happening in this market. And so I'm not claiming that the VCM Investment Attractiveness Index tries to capture that, but it's certainly a helpful reference point for people to look at year-on-year developments. We as Abatable also provide quite a lot of policy analysis on a weekly and more regular basis. So if there's any listeners that are quite interested in this space, I highly encourage them to go on our website, not just to check the VCM Investment Attractiveness Index, but also some of the policy commentary and stuff that are happening on a more regular basis.
Please do, listeners. And that actually is a good segue because I was going to ask, are there any other tools that you have or services that Abatable offers that you would like to take a second to highlight here?
Yeah, thank you for asking, Jay. I think to my point earlier, we're starting to recognize that the high integrity debate often overlooks element of risk and puts a lot of emphasis on quality in the sense of, permanence, additionality checks, and are important elements. But I think what we're trying to do at Abatable increasingly is really provide a level of transparency into risks on a project by project basis. So one of the things we're going to be releasing very soon is going to be essentially a project database. We are aggregating data from different registries, data that we have on a proprietary basis as well as Abatable. And users will be able to look at a specific project information and also have overlaid into that our innovative data layer that talks about element of policy risk, developer, implementator risk, and also methodology risk. So I'm quite excited because that sort of project is quite complementary to already some of the metrics that users might be using in the market. I'm thinking ratings or registry information, geospatial information. So that could be quite interesting. And hopefully there'll be some interesting insights people can draw from.
Absolutely. That's a great add-on. Okay, so let's discuss future. And I'm very curious to hear your thoughts on this because you're, like me, very much in the weeds of everything that's going on. And so if we look at climate finance as a whole, of course, carbon market finance is just one piece of that puzzle. I'm curious what other finance innovations or mechanisms that you think will be critical to scale nature-based solutions and then carbon avoidance and removal in the coming years.
Yeah, absolutely. I mean, we've certainly seen quite a lot of innovation from specifically the standards, right? They've done quite a lot of work in updating methodologies, being incredibly more conservative. I think that's really restored quite a lot of confidence. I would say over the last year and a half, we've really seen an acceleration around rules and regulations on how some of these new methodology may work. Plus, with that, the operationalization of the Article 6.4 developments have been certainly quite welcome for corporate buyers and investors looking at this space. You know, we have our eyes on quite a lot of things that are happening from a market development perspective. I would say the things that we are investing quite a lot of resources at Abatable is certainly everything that's happening around CORSIA, which I assume you might have discussed it previously, but for those that are not familiar, CORSIA is very much airlines needing to procure carbon credits for the international flights. And that's quite a lot of potential demand that's going to come to the market, some of which will be predominantly matched by supply from nature-based solutions. There are some projects that are developing jurisdictional forest conservation projects that certainly will be eligible and will be potential supply for airlines to buy. However, probably most of the supply is going to come from clean cooking, which has element of preventing the further deforestation by helping users switch to cleaner sources of fuels. That's on the CORSIA side. The other stuff, to be honest, like coming from London Climate Action Week, there was a sense of increased, renewed optimism on the market, which was really refreshing. And I was talking to some corporates that are potentially looking at blended finance instruments. You know, you might have seen there's some project developers that have been able to participate in some of the things that the World Bank has been leading into this space, things like impact outcome bond that's creating cheaper cost of capital solutions for project developers to be able to predominantly finance high ecological restoration projects that are very hard to make economically viable if you think about traditional finance solutions. So that's quite exciting and looking forward to seeing more project developers participate into kind of blended finance, more innovative finance solutions.
I'm right there with you. I'm a huge fan of outcome-linked bonds and just that approach, right? Because as you said, there's, of course, the making the capital more affordable, but also linking it to real world outcomes. And I've seen more action around this in the last 12 months, which is exciting. And I feel, my gut tells me we're going to see more of it going forward.
Yeah, absolutely.
So I understood that there was some conversation about that in London this past week. So that gets me pretty stoked because I want to see more of that. Okay, so regarding Abatable, what does the rest of the year have in store for you all now that we're crazily halfway through it, which is hard to believe?
Indeed. A lot has happened. To be honest, as I said, the core of what we do is predominantly helping corporate buyers access the market by operationalizing this through requests for proposals. So we've definitely been busy with a lot of RFPs, arranging them, structuring them. For corporate buyers, we've just concluded one that was very large, and we have quite a lot of work now in doing due diligence on some of these projects and shortlisting into a portfolio. This also allows us to parse through a lot of data. Some of the data we'll probably be publishing on an aggregated, anonymized basis on our platform. We're also constantly increasing our coverage of different country policy profiles. As I alluded to, we're doing quite a lot of work in mapping political risks. So that's to come. And then lastly, as I alluded to, we think the market opportunity with CORSIA is quite exciting. So we are attending conferences, working with some of the airlines in piloting some of the first transactions around CORSIA. And with that, there's a lot of learnings as to what is supply available and most importantly, how corporate buyers are approaching the market, predominantly around ability for them to transact and what are the best bells and whistles they need to be able to make a transaction. So that's quite a lot of work.
Yeah, that'll keep you busy. I'm sure the CORSIA education part alone when you're working with the corporations is a handful of work on its own.
Yeah, for sure. I think, as you pointed out, right, education is so important in this market, particularly from the place where we're coming from, which is one of mistrust. And some developments have happened, as alluded to, but a lot more needs to be provided to the corporate to feel completely confident.
Totally.
And CORSIA is quite an operationally complex scheme. There's quite a lot of details, a lot of methodologies that need to be taken into consideration. Corresponding adjustment, we haven't really talked about that, but there's also project requirements that projects need to have to be able to transact and participate, one of which is corresponding adjustments between national carbon accounting registries. So anyway, a lot to educate corporates on.
Exactly. And you and I are very familiar with these terms, but the average person certainly is not. And so when you start dropping the corresponding adjustments and all of these other, it's good, because I think that if you can raise the level of education and sophistication with the corporates, it just makes the overall market stronger. But in order to do that, it's time and resource intensive. And as you said, it's a very complicated mechanism, CORSIA in general, and there's changes and things like that. So it's just an ongoing effort. Not that that's bad. It just takes time.
For sure.
I was going to ask you another question, because I think you sit in a good position to answer this. If you are issuing more RFPs, would it be safe for me to assume that demand generally is rebounding? Because again, you and I both know that we're in this space, that demand has taken a hit due to some of the market fraud and these other things that have happened, which are very click-worthy news. So demand for a while kind of like faded away for that and other reasons. But do you feel generally that demand is starting to see a rebound?
Yeah, I think slowly for sure. The reason why we've seen demand stay relatively stable, I think, there's almost two forces at play. That's something we see. One is corporate buyers that have been so confused with the different corporate guidance that's being provided that hasn't been clear. I'm kind of thinking, SBTI is one example where everyone is waiting for to restore their potential confidence and purchasing powers. But also regulations like the Green Claims Directive in Europe that's created quite a lot of confusion. So with that, a lot of corporates have been either exiting or be on holding pattern. At the same time, we're certainly seeing an acceleration of some of the compliance schemes that have meant that some of the corporates are certainly scaling up their purchasing programs over time. So I think the two forces have reacted to a point where you've seen quite a lot of demand stabilization. And with that, I kind of reference some of the corporate retirement activity we see, right? Like the market is roughly about the same size. But I think what's happening now is there is some level of acceleration again. And I really hope, if not in 2025, to see maybe 2026 increase in terms of retirement volume. And hopefully we'll see more participation from airlines or compliance related entities as well.
Yeah, I hope you're right. And I have a feeling you are. So let's go, baby. Let's go. All right, Maria, the final question, I'm going to ask you to throw on your philosophical hat. I hope you like philosophy. And this one comes from Stoicism. Epictetus once said, "What concerns me is not the way things are, but the way people think things are," which is always increasingly more relevant. So given that, we're going to add a little spin. And my question, based off Epictetus's statement, is, what do you think is one thing that must be done to change how people think about climate finance or carbon finance?
Yeah, I'll certainly take the carbon finance one, because that's what we've been close to. I really think that there's quite a lot of misconception, especially on the fact that offsets are quite bad and carbon markets are inherently flawed. So I think really what I hope is that there's a need for a shift from what is cynicism to perhaps informed engagement. And that's really what I encourage people to do, is like dig deeper, understand, beyond what you hear in the news and click bites titles. So climate finance isn't just about the money. It's about the trust and the transparency and the transformation it brings. So I really hope people do see the good that carbon finance can unlock.
That was great. I totally agree with you. There's many more layers to the onion, as Shrek would say.
Love that.
Yeah. Well, Maria, thank you so much for joining. This was great conversation. I've been a big fan of Abatable for some time now. And so I was really excited to have the opportunity to bring you on and hear what you had to say. And I think it was great. So thank you so much.
Thank you, Jay. It's been a fantastic opportunity to talk about the great work we're doing. And kudos to you for organizing these very informed podcasts. So thank you.
It's my pleasure. Stay cool in London, okay?
Certainly will.
All right, talk to you later.
Bye.
Bye. All right, and that's a wrap. A huge thank you to Maria Filmanovic for joining the show and sharing her insights on risk, transparency, and the evolving world of carbon finance. Abatable is doing some really important work to help organizations navigate the voluntary carbon market with greater clarity and confidence. So make sure to head over to their website and see how they might be able to help you. Also, before you go, be sure to subscribe and leave a review on either Spotify or Apple Podcasts. You can also check out our other interviews and sign up for Sliced, which is our weekly newsletter covering climate finance, carbon markets, and impact investing. All right, I'll be back again in August with another money convo about the world of climate finance. Thanks for listening and take it easy. This podcast is brought to you by Gordian Strategies.